Ladies and gentlemen, let me quickly welcome back the online crew. Jason has honored us with a few visits. What I like when a company comes back is we get a progress report. He's difficult to pin down. He's a bit of a kangaroo. Then he's in whatever, then he's in whatever, now he's in whatever. So Jason, over to you. Tell us, what are you up to in Marula Mining? Thank you very much.
Glad to. Thank you. Thank you, Bernard. And thank you, everybody. We're here to talk about Marula Mining today, where, like Bernard said, I was here a year ago talking about our plans and ambitions, not just here in South Africa, but elsewhere in East Africa. So let me just quickly give you an update. Unlike many mining companies that are listed on London, our headquarters is in Nairobi. And out of Nairobi, we've built quite the business, both there in East Africa, Kenya, Tanzania, but also down here in South Africa, and particularly in the Northern Cape region. So we've listed as Marula Mining 2 years ago. And in the space of 2 years, we've grown our business quite considerably. We now have an operating mine up in the Northern Cape, the Blesberg mine, producing spodumene ore, tantalum, feldspar. We will be looking to commence production of additional tantalum tungsten up there in the Northern Cape over the second half of this year. And we're looking at some cobalt and associated mineralization here in South Africa, in Limpopo. And a few other things here, which you'll certainly hear about in the coming weeks and months from us. Up in East Africa, just this week, we've started production at our manganese mine. So perhaps we should talk. Bernard, you seem to be able to tap in some good funding here. So yes, we've just started production from our manganese mine up there. Across the border in Tanzania, we have a copper mine, which will start production in the second half of this year. And we have some incredibly good graphite projects in Tanzania, near Moshi, near Mount Kilimanjaro, where again in the second half of this year, we'll be starting our initial production. So as you can probably guess from that, we are not that true exploration company. We're looking for an accelerated production profile, developing mines, typically brownfield, or ones where the local partners have stumbled when it comes to raising capital, or don't have the necessary skills, access to the capital markets, which we can bring in out of Europe and out of here as well. Look, I think I've touched on this. Look, I've worked in Africa now for literally all of my career. I came as a young mining engineer out of the UK, working out here at the Kinross gold mine. And that was my first experience. And since then, been working throughout Southern, East, and Central Africa. So our focus is basically building on my experience, an opportunity to identify projects where we can actually get them into production. And that's the key thing. You know, I've seen and I've experienced, both as a banker, fund manager on the mining side, far too much funds being squandered and not actually going into the ground to actually accelerate those projects through to production. And that's where I believe the greatest value is to be had. It's actually producing, generating a cash flow, and actually working in amongst the communities, your stakeholders, and delivering for your shareholders. One of our partners here in South Africa is Q Global Commodities, headed up by Quinton van der Berg. Many of you will probably know him from his coal mining focus here. Over the past 2 years, he's actually diversified away from coal, and his first investment into a listed company was with us. His first board position on a listed entity was with us. And on the back of that, he's advanced funding, both directly and then through Dubai-based funds, to basically allow us to deliver on our projects. So for a lot of junior companies where they're always looking across their shoulder to find out where that next tranche of funding is going, or gearing their programs to be able to secure funding, grab that attention from investors, you know, we've been able to avoid that. We've been able to go in a straight line, whereas many juniors kind of circle a few times, go backwards and forwards, and have to deal, I guess, with a lot of the brokers, fund managers, even investment banks. And as an investment banker in my junior years, that's a horrible thing to have to do. Okay, one of the things we're very committed to is Africa. Hence our office there in Nairobi, hence our office in the Northern Cape. We're listed here. Sorry, Patricia. We actually went onto the A2X market but we are working with Patricia to get a JSE listing. We are going to be listing on the Nairobi Securities Exchange. We will be that first listing there in a number of years, first dual listing. And I actually believe we are the first metals mining company to be listed on there. So that's going to open up a lot of opportunities in East Africa, which I think is going to have a major impact, certainly in the region when it comes to funding a number of these projects. So we're listed there. This is where our business is built upon. And I think that's one of the advantages which has allowed us to really take forward all our projects towards development over the past 2 years. We'll talk about Blesberg up in the Northern Cape. For those that have been up there in the Northern Cape, it's an amazing place. Drive past Springbok, heading towards the Namibian border. We're just there on the left-hand side. Okay, we've been there now since, 18 months. Some historical work there from old-timers, basically extracting the tantalite, one of the biggest producers of tantalite ore in southern Africa, and one of the major mineralized pegmatite systems that you'll find up in that region. Extends across into Namibia, obviously, and Anthony can talk about some of his successes over there in Namibia afterwards. But look, we were very fortunate. There was about 250,000 tons of historic stockpiles from where they were mining the tantalite, and they were just throwing the spodumene across the side of the hill. So we've been able to go in there, assay that, and we've actually started processing that. And just later this month, we'll be doing our first sales out of there under a long-term offtake agreement. Very high grade, very extensive, and we've done a lot of work there over the past year, proving that up, investing heavily both in processing equipment, mobile mining equipment, and in our exploration, which, like I say, has given us an opportunity to really push ahead here. These are the stockpiles just being reprocessed. We started that earlier in 2023, and we've actually taken up there. I see we've got Tomra, Rados, both here. We're using Tomra and Rados equipment to basically dry sort that. I believe we're one of the first large-scale commercial mining operations to achieve that. And like I say, the first sales of this spodumene running at about 5.5% to 6% Li2O, so very high-grade material. We actually have the byproduct feldspar, tantalite as well, which we're selling, which more than offsets all our operating costs there. So very high margin, very profitable business, which we'll use as the base to grow up there in the Northern Cape. The expansion now into the open pit operation, the more conventional open pit, moving away from the stockpile reprocessing. We weren't doing this time last year, Bernard. We are now. So the drilling and blasting is to commence later this quarter as we move into that more conventional style mining up there. It's been a fantastic experience to date. Just doing 5,000 tonne per month of sales, but with lithium prices, even at the current low prices of $1,000 a tonne, we're quite comfortable with the sort of margins that we're going to be getting out of there. Okay, going forward, up at Blesberg, major expansion, growing our footprint. There's some adjoining licenses which we will be incorporating into our bigger plans with a view there of basically growing, using a central processing facility there at Blesberg. We've got the license adjoining to the north. We're in discussions to one to the south. So we've got a real opportunity with the infrastructure we've sunk over the course of 2023, 2024, to kind of grow that business and create quite a significant battery metals hub up there in the Northern Cape. Again, on this critical metals focus, our manganese operation, where we've started production this week, and where our first sales will be completed by the end of this week. We actually only got involved in this on the 1st of March of this year. So within 3 months, we have got in here. It's an old manganese operation, operated intermittently for the past 10 years. Again, conventional, shallow, open pit. We saw an opportunity to come in here, invest both in exploration, invest in new equipment, and basically grow that business from a very small scale up to one where we're looking at producing 250 to 500,000 tons per annum of a very good, high-quality manganese ore going into the export markets through Kenya. We can do that because, again, the environment up there allows us to move very quickly, work with our local partners, and look to expand quite a significant operation. It's open pit. Literally, we've gone in there this past week. We've upgraded existing processing equipment, very conventional crush screen, transporting down to Nairobi, then on the trains through the port of Mombasa. Very efficient, can I say very efficient infrastructure in this country?
Yeah.
I can? Okay. The roads work, the rail works, the port works. So we're 3 strikes there. So no, this has gone very well. And we are finalizing an offtake arrangement with a UK, European-based trading group where we're getting paid 80% of the product value as we deliver that into Nairobi. So very attractive for us there. Some of the high-grade material up over 55%, the sort of stuff you typically would find in Zambia. Average run of mine here, 33%. So in a very simple way, we can upgrade that to plus 37%. For those that have focused on the manganese market over the past few months, major disruptions in the supply chain there out of the mines in Australia. You've had about between 10 and 13% of global production basically taken out of the supply equation for the next 12 months or so. So you've seen benchmark prices rise 60, 70% over the past 6 weeks. So, you know, very good time to be producing and selling manganese into the market here. At the moment, there's 3 small open pits. We're going to develop that into a single large open pit. Strike length over 9 kilometers, very significant. Outcropping and outcropping in a number of places, and 1.5 to 12 meters deep. So very little overburden to be removed. Good infrastructure and offtake arrangements to be signed later this week. Okay. First sales before the end of this month, and we've secured new logistics, transportation contracts in place. One of the great things when you're dealing with commodities such as manganese, very simple processing, very simple operation. It becomes more of a logistics exercise. So it's been very fortunate for the environment we find ourselves in Kenya that we can actually do this. We've had a double win, not just with the manganese prices increasing significantly. Sea freight out of Mombasa has come down very considerably over the past month. So our margins are looking very attractive. And basically on the back of this is going to be funding a lot of our regional activity up there in East Africa. So Bernard, this wasn't even on our list last year when I was here. This is now going to be operating effectively within 3 months of us securing it. So quite a significant impact on our business. Kinusi copper. Again, I'm just going to touch on 2 of the projects we've got in Tanzania. The copper mine up there, very high grade. We've got small-scale mining taking place there. Very high-grade material, as you can see here. Mining licenses already in place. So across everything we do, there's mining licenses in place. So it gives us that ability to move forward. Okay, we haven't got a 1-2 year delay while we go through the regulatory environment. We're really very targeting in our activities. Okay, you've got over 1K strike length here, 300 meters wide. You've got a very significant ore body here. We've just reviewed our strategy to develop this at our Blesberg operations in the Northern Cape. We were able to secure the services of somebody that was very involved with Copper 360, and we've got them involved primarily to look and assist us with our development strategy here. It's very good copper, as you can see. Grades there, assays coming in 15%, 11%. The locals are effectively selling a 25 to 40% product. Grades of 6% and below, they're just stockpiling as waste. It's incredible. Everybody knows Tanzania for its gold. Copper is something I think over the course of this decade, people will see there's some great projects up there. Copper's not just about the copper belt. Copper's not just about the DRC. There's some incredible resources and projects here. And the only way you're going to find them is by getting out. We drove, I think it was 9 hours from Nairobi to go and have a look at this. And I think 7 hours into that trip, I've got some of my colleagues here, 7 hours into that trip, I was at my limit. And we were about to turn around. And then we turned the corner and we saw this. We saw the small open pits. It's one of those car trips which I'm really glad we were able to finish. But here, this is going to be developed in the second half of this year. Process plant will be coming up July, and we'll get that first product out in the last quarter of this year. Okay, again, a great little asset and something which we're expanding. We've got 10 granted mining licenses there. That'll be expanding to at least double that over the course of the next month. Lastly, but certainly not least, is our graphite projects. Located near Moshi, which is Mount Kilimanjaro. We started off here a year ago, and we had 10 granted mining licenses. We now have 35. Our initial phase of work really identified some incredible opportunities here. Large jumbo flags, and I know we've got the guys from Walkabout here doing some amazing work up in Tanzania. Tanzania is going to become one of the significant producers of graphite in the world. Some incredible projects there. What we found here at Moshi, again, significant surface mineralization extending for over 3 kilometers. You've got local miners, local cooperatives mining this, packaging it in sea containers and selling it without any processing and receiving over $1,000 a ton. This is the quality of that mineralization. You put in place a proper processing plant here, your value on that is going to go up several-fold. So it's something that we're certainly looking at, and we'll get into production again before the end of this year. Okay, again, you can see some of the flags, you can see some of this there. Our resource work on both the copper and here on the graphite is going to be completed before the end of September. That will allow us to really focus our attentions here. Okay, as you can see, very extensive. This is some of the work. Okay, your typical grades. Ooh, did we do something there? Some very good grades here, but this is very typical of what you're finding up in Tanzania. Truly a world-class graphite region, and one, like I say, I think will have a major impact in its global positioning over the course of this year as you get a couple of new projects coming on, but certainly as you go through the rest of this decade. Like I say, second half of this year, we're looking forward to a medium-sized, shallow open pit operation scheduled to commence. And like I say, I've got our head of Tanzania here, and he's pushing me, wondering how come the Kenyan manganese got in there first. But we'll be clearly pushing ahead on here. Like I say, graphite is very exciting. It was something I never thought I'd get involved with. But when you get out there and you see it, and you see the opportunities and you see what's there, and the simplicity, that's the key thing, the simplicity of these commodities, which are now critical to our world, to the very many industries and vehicles that we're driving around in. Something like this up there, and in a jurisdiction which is so supportive of mineral development, I think you've got a number of things which are coming together very well, certainly for Marula in East Africa. But again, I'm not going to knock what we're doing here. I think we're on to a great opportunity here. Okay, I'm going to finish early here for you, Bernard. So cheers. Get the questions ready. So look, what's Marula about? We do the exploration, we do the development, but the key thing for us is bringing mines into production. Medium-scale mines which have the potential to grow quite significantly. We want to get it into production in a low-risk environment. So we are looking at brownfields projects. We are looking at projects which are supportive in terms of, like I say, the regulatory environment, the government, the host government providing the opportunity to actually take something through to production relatively quickly. So we will use our cash flows. The cash flows which we're going to be generating, first sales out of the manganese this month, we're putting that straight into grow our business into Kenya, but also to assist and accelerate what we're doing into Tanzania. So we're very excited about that. South Africa is something we're going to grow our business on, Bernard. I was hoping to better announce this morning 1 acquisition, possibly 2. We'll have to wait. I think we'll announce 1 before the end of this week and another 1 next week. So we're actively looking here at growing the business. We think there's tremendous opportunities in that battery and critical metals space. And sometimes I think South Africans, you've got to go and look elsewhere around the world and just see just how good you've got it here. You still have a first world mining infrastructure. You may bemoan it time and time again, but compared to other places, it's actually not that bad. And the rule of law actually allows us, we wouldn't have been able to do that Blesberg mine as fast as we could in many other countries. We've been able to do it here, and we want to do it again in some of those other projects. So thank you very much. Open for questions. Can I sit down or stand up?
No, why don't you look like you own the podium?
Okay.
Jason, so you'll be back next year. You've teased us enough with, and there's more to come. So
Yes.
You'll be back next year. Let's do a quick poll.
Oh, that hurts.
Why?
Well, I hope it's not going to hurt.
No, we haven't started yet, so don't cry. Take up your little tool of mass democracy. You have to vote 3 times. This is South Africa, remember. We can't do anything simple.
The share price has gone up 10 times in the past 12 months. So, and we've got,
but that's last year. They said
last year
they said they
okay.
would invest. So
Okay.
I hope they did. You know?
Okay.
And you're talking about share price, not market cap.
Market cap has gone from less than £1 million to now about, with the shares we're issuing to our major shareholder, 33.
So share price has gone up.
Share price
10
has
times.
gone up. We've obviously issued shares to grow our
But you're
business as well.
influencing the people. Wait, I want to vote no. How do I do this? Okay. Okay, whilst you vote. So I never knew you worked at Kinross. When was that?
That was 1990.
Flip. Okay.
I played rugby for them as well.
Yeah, I didn't play rugby for them, but I was also there. But that would have been 1998. But I was much older than you. Obviously, I still am much older.
You're still older than me. Okay.
Yeah. And with that came wisdom, clearly. And I mean, so.
I thought you were the Peter Pan of South African mining.
I don't know what Peter Pan did. Is he a criminal? So, Jason, if I had to summarize, you move fast, you get quickly to cash flow, you've got high grade, you don't talk about size of ore bodies, I'm missing it, or doesn't it matter? A lot of your tenement seems to be 7 years, etc., etc. That's not the conventional story is 20-year life. You have to look at the NPV. You play a cash generation, quick to cash flow game, or am I?
No, it's a quick to cash flow game. But what it is as well, when we get involved with these licenses, it's an initial 7 years, such as in Tanzania. The ability to then renew, not once, but twice. So
the 7 years is not a drop dead date, it's a
Certainly not.
starting term.
absolutely.
You spoke, I think you said you like to partner with locals, especially perhaps if they stumbled. But talk to us about South Africa and partnership. How do you see that play out? Are you one of Musa's customers? Are you talking to, just give us a South African context to the partnership model that you pursue.
We've worked at the community levels. We've certainly up at Blesberg. We've established and we've worked with them to establish the community trusts. We've worked with them to get them involved, not just as shareholders in that entity, but actually as service providers there. It's not just about having that interest. You've got to be involved actively on a day-to-day basis. So working with partners, it's not just about having them as a shareholder. It's about getting them actively involved in doing something within the business. Not just sitting around the board table, but actually there providing, we were looking at it from, one of the contractors to do the crushing, to do the screening. Actually get them involved so they're growing a business.
I want to put specific questions to you quickly from Tawfiq. Are there considerations for lithium beneficiation, i.e. production of lithium carbonate and direct extraction from the mica?
We announced that about 6 months ago. So we're working with some of our processing consultants now with a view of building a carbonate plant up there. We have the funding already secured through one of the related funds through Quinton. So that investment will be coming committed at the end of July. So in the second half of this year, that's our focus. A lot of the value is sitting there in the fines. You've got a lot of the beryl, you've got a lot of the tantalite there. The lithium in particular, there's no value in selling a 6% concentrate. Let's be honest, you're transporting more waste than you are product. So you've got to do that. We're in discussions as well with one of the energy companies, about building a regional solar station up there. One of the other companies I'm involved in is a uranium company called Neo Energy Metals, about 30 k's down the road at the old Hencrease uranium project, an old Anglo project. So we're looking at a central solar power station there, which could be available to fund both operations.
So there's a comment, it's from Anonymous, and I think it may be a question. No mineral resources / reserve or DFS studies.
We've got the Competent Persons Resource Report coming out on Blesberg in the middle of June. We have the resource work coming out on Kinusi, which is the copper. That'll be coming out in September. We've already got the rough numbers. You look at Blesberg, the amount of work which has been done there historically. That Numis 1 pegmatite is already, what, 8 to 10 million tons.
But of course you could do it this way around because you were adequately funded to get started and you get to cash flow. And
most juniors have to come out and do that phased approach. Get a pre-feas, get a scoping study, get a feasibility study, because they need to get funding on the back of that. Very early on, so in November of 2022, we secured all the necessary funding to push these projects forward, available to us in various tranches when we deliver on milestones. So we're not, like I said, we're not like many other juniors where you're looking over your shoulders or you're thinking, okay, God forbid, I need to drill a director's hole over there. No, you can just go in a straight line. So you're doing it from I guess, the technical way it should be done. You know, like a lot of the major mining houses here used to do it. You know, they had the funding behind them so they could go in a straight line. A lot of juniors, you've seen it, you know, they're either treading water half the time, they're waiting for the markets to turn, you know, or they've got to go out there and give up so much value to get to that next phase of work. For us, again, we're doing all the study work. Don't get me wrong, the amount of due diligence work which we've done with Quinton's teams, with funds out of the Middle East, we've done that work. But again, we're not having to put it out there from a perspective of getting some highlights to then attract some brokers to get the share price up 10, 20%, and then secure a couple of $1 million worth of funding.
But now you're not a geologist, you're a mining engineer. So what is it that you brought, what skill that you brought to this contribute?
I'm an ex-mining engineer. These hands haven't got too dirty too often. Ex-investment banker with Investec and Rothschilds. Fund manager looking at it from the equity side of the balance sheet. And I've been on this junior corporate side now for the past 10 years. So you're covering all angles there. I mean, I've seen many geologists become managing directors and CEO that don't have that experience in the capital markets. And then they're beholden to the whims of brokers that can run rings around them. So no, all I've brought is I guess an energy to basically, let's get these things going. We don't have to go through that traditional route of 3, 4, 5 years of doing all this study work. We can actually make it go quicker. And I think that's where you create much more value.
Every time I listen to Jason, I think, thank God I'm too old. Because he's like this energizer bunny that is just all over the place, and don't follow him on Twitter. You get tired from just seeing in which countries and what new ore body is starting. It's tiring me online, never mind. But the reason I like this conversation and having it here is there are so many models to enter mining. There's not only the BHP model or the this model or the that model. There's not only the conventional model. And there are different approaches. And I think this is, for better or worse, a very different approach and seemingly quite a successful approach. So that's why please come back next year. Another anonymous question. You guys are a bunch of wizards. I mean, you know, you make me say these things. Do you prefer places that are sparsely populated? I mean, there are some advantages to where Blesberg is. I'm just saying Blesberg because from last year to this year you've improved, eh? But I'm helping you with the. So Blesberg, there are some advantages to where it is. No?
There are a lot of advantages.
Yes.
There's no question about it. Advantages of working in a region which has such a strong mining history, okay, which does still have great infrastructure, great geological endowment. Working in there, No, we're working in places in Tanzania, in Kenya, which are heavily populated.
Are they?
So the challenges you face, they're all unique, but and they come with different challenges. I mean, seriously, getting water up there at how do you say that? Blesberg.
That's okay. Don't worry.
What's that?
Don't
what's
mock
that?
me. I can't speak English.
No,
you don't
no,
speak
no, no, no.
Afrikaans. It's fair.
We had that South African cricketer, Labuschagne. Labuschagne. Is that
No,
right?
he wasn't Labuschagne when we kicked him
When he
out,
left. Okay. No. Look, I think.
When he wasn't good enough for us, he was Labuschagne.
Okay. No. Look, I actually enjoy working in those sort of places. They're amazing places to go and visit, and the impact that you can have in developing a mine there, on the communities, on being able to just move forward. You know, I've got nothing wrong with the communities, with greenies, as we used to call them many years ago, and so on. That's a process you go through. But if you can see a clear pathway, you know, you don't stop at too many obstacles. You can push your way through.
So, I mean, you knew about this conference for weeks and you missed your announcement. So that's the first failure I chalk up against.
Don't blame me. It's the
No,
other
come on,
counterparty.
dude.
Okay?
You had
So
the whole bloody year to get your announcement
we met
ready
on
for today.
Sunday morning for breakfast to try and finalize. I was that driven by it.
Ladies, gentlemen, as always, a very interesting update. Thank you very much.
Thank you very much.
See you next year. It's not a hard act to follow. Only 83% of this audience, if they had money, would have invested. So, if they had money. We must really get the money, people, yeah? Mark, you and I are chatting about my favorite company. I'm not allowed to disclose favoritism.
Yeah, I was hoping there's no presentation because we haven't got one. Shall I sit here or there?
Yeah, don't sit too close to me.
Oh, just keep your hands to yourself.
So he already scolded me for dressing like the gardener. So he's clearly still the banker. I mean, you know, he's recently into mining, clearly. Tell us a
But
little...
hold on, you made the point though. When you need money, you've got to dress appropriately. Yeah?
Talk us a little bit through how did you end up with my favorite company?
Mistake, really. I was a banker here in South Africa. I worked initially for BOE, which we did good work with you for BOE. Then BOE disappeared up its own arse. Then ABSA unhappily, then Macquarie. And by 2008, I'd had enough of interfering in other people's businesses. Yeah, it's a very sterile existence. So I was interested in Caledonia. At that time, we thought we were going to be the world's biggest cobalt producer. We were exploring a large area in northwest province of Zambia. I think we spent about $100 million and didn't really find very much. So we sold that for $1 and focused the business on...
Have you calculated the percentage return?
It was very small. It was very, very small. And the CFO at the time is sitting in the audience. It wasn't... Anyway, so... And then we bought the Blanket mine off Kinross in 2006 for about $4 million.
Were you part of the team then?
No, it's just before I joined. Otherwise, it would have been a much worse deal. And we basically slimmed Caledonia down to focus on this little gold asset. You know, we invested, we increased production from about 24,000 ounces to about 40,000 ounces. And then we had no choice. It was 2015. We were running out of resources. We had to go deeper. We had no choice. We had to go deep. We had to sink a new shaft. We probably left it a little bit too late, but you know the investment climate in Zimbabwe was challenging at the time, and we bit the bullet and did it. And we basically built a brand new mine underneath the old mine. It goes down to 4,000 feet, 1,200 meters, and we've had challenges. We've had operational challenges. I think we're through those now. So Blanket is now running nicely, and we've now built a portfolio, you know, for the next generation. So, but my initially, to answer your question, I basically went into Caledonia as a sort of not a retiring to something to build a business from interfering in other people's business. And I've got to say, I'd encourage anybody to do that. Any bankers in the audience, get a proper job, eh?
I told him that when he was at BOE, but he took the fees and the money and the bonuses. I mean, if I think about Caledonia, you think about Blanket Mine, you think about small gold mine, decent grade, well run, now bigger, but you also think about dividends and quarterly dividends. Cheapest creepers, you have to be old. I mean, us old South Africans remember when that was the expected thing for a gold mine, quarterly dividends. Are you still paying your dividends?
Yeah, every quarter. Yeah, every quarter, and we've done it.
I don't think the audience hear you. Perhaps you may
No,
need to say that's every 3 months you pay a dividend.
Every 13,
Why?
every
What's
13
wrong
months.
with
Well, partly because we can, okay, but the other thing is because we can afford it. But the other thing is it would, as a company, it would be much nicer to keep the cash in the business and squander it on fripperies and frills instead of giving it back to bloody shareholders. But we do it partly to reinforce the message for people outside Zimbabwe that, hey, we're making money, and to prove the point we're making money and we get it out of the country, here's some money every quarter. And it's a very powerful message. And similarly, inside the business, when we're making capital allocation decisions and investment decisions, the dividend is part of it. You can't just completely suck all dividend. Shareholders are in this for something, capital uplift, dividend returns, and you've got to respect that.
And do you have a publicly disclosed dividend policy?
Nope, just to pay a dividend. Yeah, so it's just to pay a dividend. If you have these, there are companies with these incredibly complex dividend policies, which it's a factor of this and the gold price and earnings and la 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 la. You can find, and there were some companies that used to pay dividends on a monthly basis. You find you spend your life chasing your tail, and then if the formula tells you you've got to cut the dividend, and you cut the dividend, there's all sorts of wailing and gnashing of teeth. Now, our policy is to pay the dividend until the policy isn't to pay the dividend. And then we'll deal with that when we get there.
Now, sometimes then, when you are such a clear stated dividend payer, you obviously attract a type of investor. Is that where you are? You attract people who like the fact that you pay dividends?
Needy ones who want money, yeah. Yeah. No, you're quite right.
And most people in the audience go, please keep those bloody investors, so that we can have
other
investors.
No, you're quite right. And where the company is right now, we've got a mature cash-generative business, blanket mine, which makes about, for this gold price, about $2 million a week. We've also now got a series of development projects which are going to be very big. And so the question we've now got to grapple with internally is, do we cut or reduce the dividend to accelerate the accumulation of cash to reduce the amount of money we need to raise in the market, or do we continue to pay the dividend? And it really depends on where you think the money's coming from. So you'll be surprised when I say this, but our most fertile equity market, the place where we've raised more money than anywhere else in the world, is Zimbabwe. Okay, we've raised more money in Zimbabwe than New York, and massively more money in Zimbabwe than London. Okay, the Zimbabwe market is entirely focused on the dividend. The UK market, to the extent it exists, somewhat focused on the dividend. The US market, they can take it or leave it. And you've got to cut your cloth according to what you think the recipient, who you're talking to. And there's no science to this. It's an art. Okay, so we're going to have to give it some serious thinking. But if we were to raise money right now, our best market is in Zim. The Zimbabweans love the dividend. Paying the dividend is a very powerful message to investors. It's also a very powerful message to the Zimbabwe government. They see that every quarter we're paying this thing. So yeah, it's something that's front of mind right now.
So you may disagree, but I think even I could run a gold mine at these gold prices. It is spectacular. Your all-in cash cost is under 1,000?
No, it has gone up.
Give us some margin numbers.
No, the all-in cash cost has gone up. Starting, our on-mine cost used to be about $700 an ounce. That's now gone up to $900 an ounce, mainly because we're using a lot more electricity than we were previously, because the new winders for the deep shaft are just much bigger, much more powerful bits of equipment. And for as long as we're running the business above 750 meters and below 750 meters, we're going to be using slightly more infrastructure than we were previously. It'll take about 2 years, I think, to rationalize that and get back to it. And also, don't forget, we've also seen sort of genuine cost uplift. But the difference between on-mine cost and on-sustaining cost, the primary increase there is because the capital expenditure we're having to spend on projects like the tailings facility, that's now categorized as sustaining capex, not expansion capex. So in total, nothing much has changed, but our all-in sustaining cost now is about 1,300. It will come down as we go forwards, but it's a categorization issue.
And
But yeah, even I'm a washed-up accountant.
even a banker can run it.
I'm not even a banker, really. I'm a bad banker. I'm a historian, an accountant. Even I could manage to do it, yeah?
Yeah, I mean, $1,000 an ounce or whatever, $900 an ounce is a fantastic margin.
But you can't run the business on the expectation that the gold price is going to stay at 2,400. If you do that, you're riding for a very bad
You've
fall.
obviously never run a marginal gold mine. That's the only story you've got
That's right.
to sell.
That's right. Yeah.
You don't have to believe it, but you better sell it. So
But actually, the man who runs the mine is there. I mean, we just took on James Mafara from Harmony a couple of weeks ago, and James, don't for a minute think this gold price is going to stay at 2,400. You run that mine like it's $1,600 an ounce, yeah?
Listen, you would call a Harmony a marginal mine today, and somebody's going to come and bliksem you. They are a high-grade miner.
Yeah.
So your expansion, so you could have expanded anywhere in the world, I suspect. But why Zimbabwe?
No, not really. First and foremost, we focused on Zimbabwe because we believe that Zimbabwe has an incredible endowment of high-grade gold assets. Okay, so Bilboes, 2.5 million ounces, 2.3 grams a ton. That is and that's open pittable. That's a standout in terms of size, grade, and you'd struggle to find that anywhere else. Secondly, we've operated successfully in Zimbabwe since 2006. We can do it. We know how to push the right buttons in the right order to get things done. Nobody else knows how to do that. And thirdly, frankly, we didn't have everything outside Zim is too expensive. So we were basically if you're looking for stuff in other jurisdictions, we're basically standing outside the shop window with our noses pressed against the glass, thinking, we can't afford it. So all those three things come together, which made us focus on Zimbabwe. We're very happy, very comfortable, and I've got to say, with our portfolio of Bilboes, Matapa, Marley Green, we can see a pathway to becoming a 500,000 ounce producer within the next 5 to 7 years. Now show me anywhere else in the world where you're going to get assets of that quality, certainly for the price we paid. We bought what, 2.5 million ounces for about $65 million.
$30
A bit less, yeah.
a reserve ounce. And tell me,
M&I. But,
and tell me, so capital hump. You spoke about capital allocation, dividends versus funding versus raising. Just give us the sort of on the journey to 500,000 ounces.
Okay.
Are you going to regularly have to find
It's a little bit premature to talk about that right now, and I'm sorry we don't run our corporate disclosure timetable to accommodate your conference. There is.
I mean, really, these people.
There is another conference we're going to in New York in 2 weeks' time, and we're hoping to put an announcement out before that one. So it's a little bit premature to talk about it. But yeah, the project, based on the information that's already out there, it's sort of peak funding of $250 million. So we're capitalized at $200 million. Because it's a rich project in terms of its returns, we expect we can fund probably 2/3 of that by debt, and the balance by equity. Equity would be internal, cash generated, plus a few things we can sell that we've down the back of the sofa, with hopefully a very modest equity raise. Because the point the previous speaker was making, one of the frustrations of being a junior miner is that if you're not careful, you find yourself deferring projects because you're at the whim and dependent on the appetite of the markets, which is fickle beyond belief. I mean, there's no rhyme or reason to why equity investors will invest this week and won't invest next week. And you've got to try and minimize the reliance on the equity market, because you get scalped. I mean, I was a banker. I was a scalper. Yeah.
But you gold miners, I mean, you can fabricate your own money. You can do hedging, and you can do streaming, and you can do all these.
There are many more ways of doing it now than there used to be. So our approach is purely focused on maximizing net present value per Caledonia share. We're not chasing ounces, and we're not hidebound in our approach. So we will look at every funding option that's open to us, provided it's legal. So that includes in streaming, royalties, straightforward debt, public equity, private equity, joint venture, whatever it takes to bring the project forward and optimize NPV per share for
Caledonia. It's a
Caledonia.
bit easier in gold with deep markets for some of these instruments. No?
Yeah, and it's become much more flexible, so you're quite right, yeah. Although, being in Zim makes it difficult because, the transacting counterparty can't be a Zimbabwean, it must be an offshore counterparty, which makes life a bit tricky, but we can deal with that.
It's such a boring story. I mean, anybody interested in gold?
It's not a boring
anybody
story.
interested in a profitable gold mining company?
No, I mean, it's not boring. The difference we have made already in Zimbabwe, and there's been a lot of conversations about community impact. The community owned 10% of the project. It's a deal we did in 2012. We did that under pressure from government. We could have and we should have done that much earlier. And the impact that 10% shareholding makes on the local community is unbelievable. And I was horrified, sitting in the audience this morning, to understand that South African mining companies can be BEE compliant, but that doesn't necessarily flow through to anything for the community. And that's just doesn't make sense to me. The fact that a mine could be BE compliant, but the guys sitting in the community around the mine gate get no benefit from it. That's a hiding to a real bruising, eh?
So my own limited exposure to Zimbabwe, obviously today, who you find left operating in Zimbabwe doesn't bash Zimbabwe, doesn't complain about lack of. I mean, I find the Zimbabwean managers very focused on what is under their control. Are you running in Zimbabwe? I mean, I love this conversation. We talk about expats. I mean, what is an expat in Australia? What's an expat in South Africa? Are you running your mine with Zimbabwean skills? Is it a Zimbabwean-run operation?
We've got 2,000 workers at the mine. Every single one is a Zimbabwean, a black Zimbabwean. We've got 29 in Johannesburg, mainly white Afrikaners. The new chief operating officer is a black Zimbabwean. In due course, will relocate to Bulawayo. There is no shortage of highly competent, well-qualified, diligent, hard-working Zimbabweans to do this. Absolutely no shortage at all. And we were pleasantly surprised, actually, by the strength and depth of the candidates that we were shown. Very, very surprised. Very pleased. It's good. Certainly, using expats, they get very expensive. They destabilize the local workforce, and you end up paying for. Don't forget, every dollar that we spend out the country, every dollar we spend in South Africa costs us $1.50 to get out of Zimbabwe by various tax leakages. And then if people go for a week to work in Zim, effectively you get 3 days work for 5 days pay. So all of those reasons push you back to using local workforce.
So if I just abuse having you to talk a little bit about Zimbabwe, I mean, so gold mining, I see platinum mining in Zimbabwe, perhaps those are sort of dollar-denominated commodities. Is that a unique feature that makes it easier? Is it easier to mine gold in Zimbabwe than what it may be to mine lithium or coal or chrome?
We're a dollar-denominated, we operate in dollars. We sell 75% of our gold offshore through Dubai. We get paid in dollars. 25% we sell locally. We get paid local currency. We spend local currency in country, taxes, that sort of stuff. But you've got to be very quick, especially as in the first quarter of the year, as the exchange rate just collapsed. You've got to make sure that you, if you got local cash, you spend it that day, but even then, that day, not tomorrow, and hopefully in the morning, not the afternoon. But even so, before they sort of got rid of the previous currency, in that one quarter, off $38 million of revenue, I think we lost about $4 million in FX. Now that's not sustainable. Clearly, that's not sustainable. So they introduced a new currency early in April, and that's been relatively stable. The currencies seem to last about 6 years, 5 or 6 years, and then there's a new one. But yes, if we were operating purely in local currency, it would be impossible. You just wouldn't be able to do it.
And obviously, one always functions in a context of the environment. and your employees live in Zimbabwe, do they get paid in dollars?
No, they live, we've got 2,000 workers, they live on our mine village with their families, which is a very wholesome environment. It means we can provide them with electricity and drinking water and that sort of stuff. But we don't run a ghetto. So it's not as though they go to the mine village and the mine school in the mine village and they shop on the mine. They participate in the local community. Sorry, what was the full question?
I was asking about looking after your employees, paying them in dollars.
We pay them in dollars.
Otherwise, they live in a Zimbabwean currency environment.
Yeah. Well, in 2008, when the hyperinflation in Zimbabwe was at its worst, and Steve was the CFO at the time, in those days we weren't allowed to pay them in US dollars, and so we paid them in local currency. We couldn't get a big enough lorry with the cash in it. So I think we ended up paying them in diesel, didn't we, Steve? We paid them in diesel illegally, in breach of foreign exchange code. We're not in the business of making money for shareholders by eroding by screwing our workers.
Of course.
Yeah, we can't do that. We can't do that.
How does this play out as your local inflation? We went to your cost of production, and you had sort of big ticket item explanations for that. So, are you affected by Zimbabwean inflation?
No, not to a great extent. Yeah. Most of the stuff we use on the mine, we procure here in Johannesburg. We've got a very efficient procurement operation here. And actually, we've been pleased to actually drive down some of our input costs. The money that we spend locally, so the RTGS that we're receiving locally, if you've got stuff left over having paid government and you've got to spend it quickly, you will find that you're buying local product at a price on the see-through dollar price, which is more expensive. But you've got to minimize that. You've got to minimize that.
So, Blanket's a very successful underground mine. You deepened it. It's got a long life. You're now going to...
Well, it has a long life. We've just, in anticipation of coming here, we put out a resource update last week. So we've doubled our reserves. So we've now got a 10-year life of mine based on measured and indicated. And now if you include inferred, and we mine inferred resources every day, that goes out to 2041. And we're very comfortable we can extend that further. So the Blanket's been running since, 1907. I've got no doubt it will continue well past 2041.
And I mean, in your announcements and so on, just tell the audience what gold price do you assume for your reserve declaration?
I think it's 1850. Yeah, but that's largely because we're a US reporter. That's largely driven by a formula. We have to use a trailing 3-year average. But no, we don't plan the mine on the basis of high gold prices forever.
You know where the trailing 3-year was invented? On the way down.
Yeah.
When Gordon Brown was in charge of the world. It served us. So perhaps we can seamlessly just go to questions from the audience as well. So Bruce Williamson wants to know about the tax rate on gold operations in Zim, any royalties, and can CapEx be written off 100% per annum?
Yep, 5% royalty at this gold price. If the gold price fell to, I think, below 1350, I think the royalty drops to 3%, so 5% royalty. The income tax rate is about 25%, 25% there or thereabouts, Chester, 25%. 100% write-off of capital expenditure in the year. So the tax rate is by no means onerous, and it's been stable. We've not sort of seen the tax warfare that you've seen in some of the other African jurisdictions. So tax in Zim is by no means difficult.
And is there any conversation ever of windfall taxes when the gold price goes up?
No.
But the gold industry is not huge in Zimbabwe. I mean, it's you guys.
It is relatively big. I think the problem is that so many gold producers, because the Zimbabwean gold sector has been horrifically undercapitalized for decades and decades and decades. Even at this higher gold price, many Zimbabwean gold mines are still living a hand-to-mouth existence. And so they don't see... It's not a big enough pot to fish in, frankly.
So if this mine was in another jurisdiction, anyone,
Australia.
what would have been different from a safety and or a ESG environmental perspective? What are you doing in Zimbabwe that you perhaps wouldn't have done in Canada, if anything?
Well, I don't think we'd be operating a 3.5 gram a ton underground mine in Canada. I think the economics would kill that. So I don't think we'd have done anything different from a safety perspective. In terms of ESG, clearly we've got the 10% local ownership, which if we were elsewhere in the world, we probably wouldn't have done. We've got 10% employee ownership, which I think we probably would have done anywhere else in the world. But the fairly comprehensive CSR program that we do, maybe we wouldn't have done that if we'd have been in Canada or Australia. But I think that the thing is, giving a message, talking about the business here to people in this room, you've got to adopt slightly different messaging, or you've got to be very, very sensitive to the fact that if I'm telling you how much we're making every week, you've got to be quite careful in Zimbabwe to add on to that how much of that is also flows into the local community. You must avoid giving the impression, the incorrect impression that it's all money flowing out the country to Jersey. There's a lot being spent locally.
You must know what hell I have sitting here with Alex Membere from Zimplat. And I ask him questions. It's like I'm speaking to a politician. Most polite answers or non-committal answers you ever get, and I understand the context.
It is heavily politicized. And as long as you're aware of it and you recognize it, you've got to just make sure that you recognize both sides of the coin.
So I need you guys. So I didn't realize. Yeah, you are now seeing the results. So I don't want only 34% of 34 people participating. Would you invest in Caledonia Mining? It's a nice, safe question. You can say yes, and you don't have to. So. But you can. Well, if you don't invest in gold, I mean, you are so dumb. I mean, it's really. Get over your Bitcoin and get the real stuff. You remember when Bitcoin was like gold? Yeah. So there's a question around, we've got two questions. One is about staff ownership.
10%. 10%
All
employed.
employees.
10%.
Yeah.
At the mine.
Yeah.
At the mine.
You did say, yeah. And that's that's like spread on some sort of, according to your earnings, or is it everybody gets the same? Or?
No, we've just, that's a very good question. We've just made that more equitable by making it more transparent, yeah. Because let's face it, we've got the senior guys at the mine get very, very well remunerated on the basis of salaries, short-term cash bonuses, and then long-term incentives. So really, the benefit of the employee ownership program, as far as I'm concerned, should be completely flat, or probably targeted at the lower levels.
Powering your mine in Zimbabwe. Could you talk about your approach?
Yeah, Zimbabwe's got the same power problems that South Africa has. Too many people wanting it and not enough to go around, and that's been a constant problem. Zimbabwe was their approach was very different to South Africa. So the government encouraged us and supported us in the construction of a solar project. So we raised money in New York, put in a solar project, commissioned that I think about 2 years ago, and that provides about about a fifth of our average daily usage. And government was very supportive about fast-tracking all the regulations and smoothing the path of getting all this kit and caboodle across the board. That was very good. In a way, I suspect may not have happened in this country. And then another initiative was the government sponsored something called the Intensive Energy User Group, whereby the big Zimbabwean users import power directly. So we import our power as part of a club from Zambia and Mozambique, which has helped enormously. And again, I can't imagine that happening in this country. So within the constraints of the fact there ain't no power, and what power you do have in Zim goes through an incredibly creaky grid, the Zimbabwean authorities have actually been quite commercial and quite quick to try and find the best fix.
So you also watch the rainfall in Africa and the water levels of Kalrabasa and so on.
Yeah, we do. Yeah. But I say, there's no shortage. Right? There's no shortage. If you're paying dollars, there's no shortage of power. And it's not expensive.
Which is a key point. Hard currency gives you what you need.
Yep.
Errol Smart asked, he's not smart, but his
Errol used,
surname is smart. You know
Errol used to run the mine next door.
Errol not smart is asking.
How did you do it? Sorry.
Listen, he's twice my size. He can take me out any time if I offend him. Surely Vuba must be a logical bolt onto blanket. Was that too messy?
Vuba is broken beyond belief. Don't want to go there. The cost, if we appeared over the horizon looking for Vuba, we would be swamped by the creditors who want immediate repayment, the capital cost to rehabilitate the mine, and the ESG liabilities. So I'm afraid Vuba is an example. I don't know if Errol's there. It's gone very, very downhill since your day, okay? And you drive past that and you lock the door and shut the windows and go as fast as you can, I'm afraid.
Is that like a neighboring gold mine?
It's immediately adjacent to us.
Immediately
adjacent. And that's an example of ownership which hasn't invested to sustain the mine. And ordinarily, Vuba would be right up there, but I'm afraid there's some things that you just can't get them to go beyond the pale, which is a shame, big shame.
There's a question which probably may be slightly ignorant, and I don't say that derogatory, but are there any endeavors to increase processing capabilities? Do you process the ore? So that's why I say it sounds like somebody just asked without
look, we got a very
what are you doing on the processing
so
side?
we've got a CIL plant. Half the gold comes out as free gold, which is incredibly simple. And the other half goes through a CIL plant. We produce doré to about 80-85%. That then goes to be finally refined up to about 99.5 in Harare. And then once it's been refined there, and then we do that because the Zim government wants absolute clarity as to how much gold's being produced and how much gold's being exported. And so it's refined on a toll treatment basis by Fidelity in Harare. 25% then gets sold to the government, and the remaining 75% we export ourselves. And then it's re-refined in Dubai as Dubai Good Delivery bars. Now, the new project that we're doing at Bilboes, that's a more complex metallurgical processing, which will require BIOX.
Just when I think I'm over my gold addiction, I speak to a gold miner. I get jealous all over again. Damn it.
I'm going to say, it's the most fun you can have with a suit on.
Take your suit off. And that's not an invitation to anything. Okay, just drop your banker attitude here. Ladies, gentlemen, I truly hope you guys are back next year. It's a story I personally like following. I think you actually showcase a lot of things which people need to hear. There's so much in your story which is unique. And so thank you for coming back. Some people say they will invest in you. You can test them.
No, thank you. Thanks. We'll send a...
Thank you very much.
Thank you very much.
Thank you, Mark and team.
Thank you.
I really thought you leave a cozy banker's job to get out of the suit. I don't know how you get out of a banker's job and still wear a suit, eh? Okay, let's talk to more miners, wannabe miners. Where's this Viljoen dude, eh?
Hi,
how are you?
Very well, thanks yourself.
Good.
Good to see you.
These guys get lazy. I must tell you about this company. Sit down. Let me abuse you before we sit down.
No, looking forward to it.
Anthony doesn't want to make a presentation. He would rather me talk to him. Then his team gets involved. Now they outsource the preparation to me. They say, so at some point, your team got a message.
Yeah.
I think the message went somewhere along the lines of, I do not work for Anthony. Tell him to fuck off. Okay. So I hope that message got to you.
I hope you got the message back as well.
No, I'm waiting. So give it to me now. What is the message?
No. We've presented here 2 or 3 times, so I thought people might be getting bored of seeing the presentation, and thought we would rather have more focused questions.
Absolutely. Now, I really appreciate the conversation, but when your team wanted me to, prepare the questions for you, I had to tell them, dude, do that. That's not how it's going to work.
I was surprised that you even allowed them to give you questions.
But I do want to, for those who may not recall last year's presentation, just give us the story of Andrada. Just give us the backstory.
Okay, so look, I mean, you may or may not know, come from sort of mining heritage. We grew up on the
They
gold
were
fields.
geologists, man. Don't
Yeah,
forget.
well, I remember growing up on the old Royberg tin mine, and back in the day, and anyway, it's sort of fast forward. We were looking at opportunities, my partner and I, in the mid 2000s, and we saw my father and my uncle were advising a number of successful junior mining companies, and we said, hey, well, let's do this together, and it's been a very successful journey since about 2006. We've listed and developed a coal project in Madagascar. We listed that in Australia. We built Bushveld at the time from an explorer into producer of 5% of the world's vanadium. Unfortunately, those aren't such good days. But we've always been focused on the geologies of Africa and the geologies that we believe are productive for mines. We weren't quite as brave as Boris back then. We liked the grade, obviously, of BCA, but we were focused more on the historic jurisdictions of Southern Africa, and so we had this suite of tin assets within Bushveld. And in 2017, I demerged those assets and floated them separately in London. I brought my team of engineers and geos that I've worked with over many years in-house, and we set about building a mining company from scratch. And we were lucky enough to be in Namibia in some pretty spectacular geology that I think is going to be very productive in the next decade or so.
But now, tin. Yes.
Yeah, well, so tin's...
Yeah, no, talk to us. Do they even still use tin?
Yeah, so tin's an interesting one. I often refer to tin as copper's poor cousin, because...
It's like silver and gold.
Yeah.
Have fun at each other, and yeah.
Because you'll see the copper price go up, and then about a month later, the tin price follows suit. It's got its new applications in all of your microchips and your semiconductors. So it's had somewhat of a renaissance from a demand point of view, but you've had 30 to 40 years of a lack of exploration and development. And so you've got this kind of dearth of new mines coming through. And listen, it's not only tin specific. I think in general, you're seeing a pushing demand. People haven't kept up with exploration and development. People need to look at ore bodies differently to how they used to look at them in the past. We've associated with our tin ore body, which was at one stage the largest hard rock tin mine in the world, is now probably one of the biggest open cast lithium deposits in the planet, all mined from the same ore body. So, my late uncle used to drill it into us. You can't start a mine if you don't understand your ore body. And I know we followed a similar path to what Jace has done from getting into production early, but there's a definite place for understanding ore body and understanding how your ore body works when you throw the rocks into the plant.
So which mega sort of story do we have to buy to see that as positive for tin? Is it electric vehicles? Is it, what is the mega story that is positive for tin?
The mega story is semiconductors. So, if you look at one of the best performing stocks in the world at the moment is NVIDIA. That's their primary sort of source of business is creating semiconductors and microchips. And, the semiconductors are made of tin. So, you're getting this huge demand, specifically from AI-linked applications. You're seeing a huge push in demand, but people always forget about the raw materials required to go into that. And we're seeing that very much so as you're getting into this critical raw materials transition, that there's just not enough new mines. They're all new materials, so you literally are starting a whole new exploration and development of new products and new minerals.
But I mean, of course, the audience all know this, so I'm the only guy asking the dumb questions because I've never paid attention to tin.
Yeah.
Well, I don't pay attention to much in life, but so tin is getting sucked into something that is a big trend in the world. That's fantastic. Is there substitution? Is there a point where instead of tin we can use gold or something else? Or?
No, so look, the only natural substitute is lead, but obviously lead's got negative health implications for humans. So, you know, where the whole sort of genesis of this tin transition happened was in the mid 2000s. All of the semiconductors were made of tin and lead, of a tin and lead alloy. And then they banned lead in these alloys, and you know, it's been one-way traffic ever since then. Well,
I've listened to Boris so many times.
Yeah.
I'm a bit skeptical about the tin price.
Yeah.
And tell me, is tin then a critical mineral by any definition in any jurisdiction?
It is now, very much so, because of you know, what you're seeing is a decoupling of supply chains. So you know, most of the chips are sort of made in Taiwan, but you've seen that the Chinese that are picking up their chip production. You're seeing the Americans looking to you know, get their sort of chip production sort of sorted out, and they're looking at different supply chains. And so I mean, this geopolitical situation in the critical raw material space is absolutely phenomenal. We're seeing it not only in the tin, but also very much so in the lithium, because we really are starting to get to grips with how we're going to start producing and selling the lithium. We've already started production of our lithium from our ore body. So we are seeing that this decoupling of supply chains is having a huge impact on geopolitical relations. And you know, I think that we're seeing specifically each big global power looking to support their own supply chains.
So if I had to follow an ounce or a gram of your tin from Namibia, where would it go before it goes to Taiwan to go back to America as a chip? What is the sort of journey of tin?
So mined obviously at Weiss, trucked to the port. From the port, we sell it to Thai-Sarco, which is the Thailand smelting and refining company. So funnily enough, Phuket in Thailand was actually a very big, it was a tin island. And there's an old, well, not old, the smelter still remains there. It's one of the biggest smelters in the world. They produce 99.99% tin ingot, and then they supply that to all of the chip manufacturers.
So there's no Chinese step in this process of yours, right?
No. In fact, Thai-Sarco is actually owned by the AMC, which is a trading company out of the UK, which was at one stage the biggest government-owned metals trading company in the UK.
And then is that final consumption, or is it like everything else part of circular? Does it get recycled? Tin?
It's very difficult to recycle because it doesn't occur in large quantities. So it doesn't. Although some of it is recycled, it doesn't have that natural capability to recycle.
Sorry, that was my education. Nobody pays me, so I have to be educated for free.
Yeah.
I do apologize if you knew a lot more about tin than me. I do apologize. So let's go back to your story. So the why tin we explored. Why Namibia?
So when we were looking at the different geologies of Southern Africa, you know, we looked at all the historic tin regions. So at one stage, we actually owned the old Zyplots tin mine. We looked at Rooiberg. It had its limitations. We looked at the Union, Mochifides, Kamativi. We looked at everything, and you know, everyone. The problem in the mining industry is everyone's got a perception about someone else's ore body, and everyone's got a better ore body than the next, as we all know. And grade tends to be the differentiating factor, but what we found in Namibia is just a spectacular geology, and you know, I really think that as people as people get to grips with what the geology entails there, it's going to really open up Namibia more than, well, not more than, I mean, the oil is just going to take Namibia to a whole new paradigm. But this geology is characterized by these pegmatite belts, and so within your pegmatite belts, you'll find all your hard rock lithium, all your hard rock tin, tantalum is, well, sorry, not tin, but all your hard rock lithium is found in these pegmatite belts. Now, usually a pegmatite belt runs for a couple of 100 meters and pinches out. So, Jace's, he's like the Blesberg pegmatite. But what's unique about Namibia is just the scale of these things. They run for hundreds of kilometers east to west, and are sort of spread up all through the coast. So the southern pegmatite belts tend to have your uranium, and as you go further north, you're getting into your critical raw materials. And these have never been exploited necessarily in the past. I mean, ISCOR used to mine the West where we are at the moment, but they only focused in on the tin. And what we're finding with the ore body is just the diversity of different minerals. It's like a lucky packet. And what's actually surpassing the tin now is going to be the lithium revenue. So the mine's profitable on tin alone, but the cherry on the cake is going to be integrating the lithium into our circuit.
Yeah, and since last year, you've indicated that you will start producing lithium and tantalum. How's that going?
So it's going well. So the tantalum, we've shipped our first shipment of tantalum. We've produced our pilot plant we set up, and I'll explain why we pilot, which is similar to what Jace has done, is understanding how the ore body works, and understanding the ore. What we find with a lot of lithium ore bodies is that there's a lot of variability in grade across the ore body. So you really need to understand how that variability is going to work in your plant. So what we found, we've built this pilot facility. It's working. It's worked an absolute treat. It's proved everything that we've wanted it to prove, and now we're looking to integrate the lithium, the full production into the final circuit. So we didn't want to ever stop the tin production, but now the natural sort of flow of the circuit, all the heavier stuff, your tin and your tantalum, reports into one part of the circuit, and all of your lithium, which is your lighter feldspars and micas, is currently reporting to waste. So what we're looking to do is capture that waste stream and produce a tin concentrate from that. So then effectively we'll have at a baseline 3 different elements, but we're also looking to sell the micas, and just get maximum benefit out of the ore body. And it's like a palabora. Polymetallic ore bodies are a real treat. If you don't have gold, you want to have a polymetallic ore body.
No, you keep that one. Thank you. I'll have his gold then. Remember, I didn't attend those geology classes at varsity, nor the metallurgy classes, so I cannot handle this complexity. In what shape or form do you then sell your lithium? What do you ship?
So we're shipping a concentrate
Of lithium?
Of lithium, yes. Yeah. Look, everyone talks about downstream beneficiation and what have you, and we are looking at technologies. There's good technology coming out of Finland, but it's a very complex. It's a chemical refinery, and it's not as straightforward as just saying, well, let's beneficiate in country. So we are looking at those type of technologies. Currently, the only refineries globally are in China. We're seeing a lot more development in Europe and in America, but the refinery capacity in the West and America remains very limited.
Do you have plans of expanding to other jurisdictions?
Yes, very much so, Bernard. So look. I mean, we've got our hands full. We've actually got an old Goldfields mine, also in Namibia, at the old Brandberg West mine. So that's a tin, tungsten, copper, and we'll follow the same kind of route that we've done with Uis. We in the Great Lakes. We're looking. There's some pretty fertile geology in the Great Lakes region of Africa. There's. I don't want to be preemptive, but it looks like there are even a few green shoots coming up in South Africa, which would be great. It's still got a lot
According to Musa, it's a lot more than a few. I mean,
Yeah, well,
he's drinking his own Kool-Aid, that short geologist. I mean,
Yeah,
where
yeah.
is he now?
Yeah, no, Moose and I have been traveled a long road together.
Yeah, no,
so,
I think you went to the same school of geology.
Yeah. No, but look, I mean, there's still so much potential, I think, in Southern Africa.
And this is now tin focused or polymetallic?
Well, it will be critical raw materials
Yeah.
focused. So and typically, we understand pegmatites, we understand pegmatite metallurgy and mineralogy. So we'll keep a focus on those elements specifically. But where there are opportunities within the pegmatites, because as I said, they do come up with a number of different elements. We will start to look at other elements. But all focused on the green energy transition.
And back in Namibia, do you own what you should own? Are you your own up dip and down dip neighbors?
Yes,
by now?
yeah.
Respect it all.
Yeah, we've got our license is sort of 225 square kilometers, so it's a huge license. The space is very
And that's
vast.
why he got a helicopter, just to fly his license.
Yeah. From my gold company.
So give us a sort of a standout success story of Andrada's mining operation. So, I mean, what is the...
Look, it takes a lot, as the Caledonia guys were explaining, as Jace explained, people don't build mines anymore. It's becoming a very limited sort of skill set. And a very limited risk, risk capability to build mines. And I'm particularly proud of the team that we've put together. We've grown as a team. We're lucky enough to have some pretty high-profile board of directors to guide us along the way. But being able to put together a mining team in what is a difficult kind of phase of the mining sector, and to actually go and build, operate, and expand operations, and now bring in a diversity of minerals. It's pretty spectacular. It's a huge sense of achievement for my team and for myself. And every time we go out there, it gets bigger and better. We've got world-class health and safety standards, and it's just this kind of driving ambition to keep growing bigger and to become the next mid-tier sort of, I don't want to use the word junior miner, but the next mid-tier miner emerging out of Africa.
An end game, somebody comes and buys you for a fortune and you finally retire.
Yeah. No, I'll go and start running conferences, I think.
There's a vacancy. So you sit here and you actually corrupt a generation of young people, think it's all fun.
Yeah.
They think you've lost your hair for other things.
Yeah.
There were some challenges. So talk to us about challenges on this journey.
Yeah, look at the challenges. I mean, geez, it was like damn hard to start, and we're running a dense media separating plant, and once you've built the plant and you're expecting tin to come out and revenue to come out straight away. When you can't balance the pressure throughout the plant, and then the crusher goes down, and you're struggling for months.
You're bursting out into sweat.
Yeah. Look, there were some deep, dark days that we, I remember going up to my chief operating officer, Frans van Dalen, and say, I used to go to him every day and say, yes, Frans, is this going to work? You know what I mean? You're burning through 10 million rand a month, and you got nothing coming in. There was some deep, dark days there. But look, we're stronger for it. My hairline's not stronger for it, but everything else is.
Yeah. So I want to explore. Sorry, no, that sounds like a pun. I just want to take the topic a bit to. Is there like space for innovation in a African junior mining company? Can I call you African junior mining company for the moment? What have you done that
Emerging mid-tier.
Emerging mid-tier, I
Yeah.
like that. Emerging. But can you emerge now, please? Next year, will you be emerged?
Yes. No, look.
What innovation takes place in that space? What are you doing that is different from Iscor
Yeah.
50 years ago?
So there's. I was actually having lunch with Boris, funnily enough, and you know there are few areas in which mining can actually look to expand. What we are seeing now is in the ore sorting space. I think ore sorting, and we're looking to introduce ore sorters at our plant.
When Jason was also talking about
Yes, yeah. So we're looking at the Tomra ore sorters. Helga, there you go. There's your mention. So we're looking at installing these XRT ore sorters, and I think that's, you know, as grades and as deposits start depleting globally, I think that you are going to see that you're going to have to have more innovative technology,
a cheaper concentration
and
step,
and cheaper pre-concentration.
Yeah.
You know, so that's where we are going. I think also what you know, we're not quite as gung ho as JS, but you know, you do want to get into production quicker than a sort of an Anglo type of plant. So you know, you want to focus on early cash flows, world-class ore bodies that can expand and that you can bring into production quicker than others.
So far, you and I have both voted that we will invest in Andrada Mining.
Good.
But we'll now invite the rest of the audience to join us.
Okay.
And in the remaining 6-7 minutes, please just give us an indication of how gullible are you? Which part of the story do you swallow, hook, line, and sinker? You know?
Yeah, and for all the people saying no, there's free Andrada pens at the back. So.
But this is why CEOs travel with huge teams. The first 5 votes is from the team.
Yeah.
Well, I hope they vote for me.
Yeah, I hope so.
Listen, I've got many questions, so let me
please.
seamlessly go into the audience questions. Andy Clay wants to know, are you still using bulk sampling to estimate grades and in your ore bodies? Of course, Andy would ask that.
No, Andy.
Andy, I mean, geez.
No, well, I think Andy actually did the initial feasibility, or what a scoping study, I'll call it, on UIS.
Well, not for Iscor, just for you guys.
Yeah, for us.
Yeah, no, I mean, Andy is old, but not that old.
Yeah.
I mean, geez.
No, so Andy, look, we've I mean, we on the tin side, we know pretty much what needs to happen. You know, because we're in production already, and we've got a good understanding of how the ore operates. But definitely for the lithium component, we are looking at bulk sampling. We've got a very big facility. We spent about $8 million just building the facility last year. That includes a lab, and it's I think you know, as you're finding these new minerals that don't have a long precedence for being mined, you need to almost invent the process as you go. So yeah, we are seeing we are using the bulk sample processing quite a bit, and also with the ore sorting, you know, we're working with ore sorting technology providers and doing test work on that. You know, we're strong believers in, you know, piloting and then rolling out mass production.
So many questions. I'm going to fire away quickly from Tawfiq. Has Namibia's ban on unprocessed minerals been beneficial on your bottom line?
No, so that's a bit of a misnomer. That they never banned it. There was a lot of sort of guys that were trying to export raw ore, And they didn't, with the lithium side, they wanted people to build concentrating plants, which is what we do anyway. So there was no ban per se that they're banning a blanket ban on minerals. It was just to promote concentration of minerals in country.
Charlotte Matthews wants to know, how confident are you that lithium and tin prices are going to hold above your cost of production, given other projects coming on stream around the world?
Look, with tin, we believe that the replacement cost of a tin mine is still sitting at around $30,000 a ton. On the lithium side, people talk about a lot of lithium mines coming into production, but what we've seen with these price fluctuations that are more demand-led than supply-led is that a lot of these supposed projects aren't actually coming to fruition. And the world's going to need a lot of lithium. Electric cars are growing at a rate of 30% a year. The next 5 to 10 years, there's no substitute for lithium-ion batteries. So, at least in the next 10 years, we're going to see, lithium production. And the key thing as a miner is it's not about chasing the price. If you chase the price, you're going to go out of business. All you got to do is dig holes and sell dirt cheaper than the next guy.
And this shift to green or this energy transition is fantastic, drives commodities. But does that put pressure on you to have to green your own electricity supply or your own electricity consumption in Namibia?
Yes, and that's a good point. Electricity in Namibia is I'd say 70% of the country's electricity is from renewable sources. It's a natural haven for wind and for obviously solar. So we are seeing a proliferation of wind and solar projects, especially also linked to the development of the green hydrogen industry in Namibia. So we luckily enough aren't sort of exposed to chemicals. Everything's a gravity-based separation. So we've got a very low environmental footprint, and we pride ourselves on being able to produce minerals for the next for the green transition in a responsible, environmentally friendly way.
So a question from Simbongi Zeni. What is your average cut-off grade in situ for lithium? Let me try again. What is your average cut-off grade? I think it's meant to be in situ of lithium being mined, and was the historical geoscience information useful to undertake exploration? Sounds like two questions.
Yeah, okay. So definitely the historical geoscience on the tin specifically was phenomenal. ISCOR drilled.
It was a tin mine.
Yeah. So and within 25 meters. So we didn't have any of the cores, so we had to do some confirmatory drilling, but I mean it's such a robust data set. They didn't mine for lithium back then. They didn't even test for lithium, so we've had to do a lot of resource drilling on that. We are seeing that grades of between 0.8 and 1% is the sort of sweet spot, and anything over 1% won't require flotation. So that is where we're looking. As I said, variability across the ore body is something that we're getting to grips with. But I think a combination of gravity and flotation will manage the lower grade portions of the ore body.
So Andrew Cunningham obviously follows you in the region closer than me. He's asking, Chinese companies in this region have dodgy operations, and there's been negative publicity around this. Is this affecting operations or public perception?
Yeah, look, I get asked this question a lot. I mean, the Chinese own Rossing, they own Husab. There are smaller Chinese companies operating.
Are they dodgy?
There are. Look, there's dodgy miners and there's good miners. So I don't sort of attribute one particular kind of group to that, to be honest. But yeah, look, I mean, there's dodgy practices in mining, all around. You just got to try and, we play everything with a straight bat and try and avoid that.
We've run out of time. I've learned a lot.
Okay.
Sorry, audience, but I understand tin a little bit better. Please be back next year. Tell us about your growth. It sounds like there's a lithium story emerging on top of.
Very much so. I think that will be the story that we tell next year. So looking forward to that.
Ladies, gentlemen, I'm checking on my program. I cost you a few seconds of tea time. I do apologize. We're coming back for that old man Andy Clay's input, so we'll hear what he's got to say.
Yeah.
Thank you. Please join me in thanking Anthony.
Thank you very much.
Thank you.
Thanks, Bernard. Thanks a lot.